Alright guys, I think the time has come. This might be a long video. Bear with me on it. Some things I may talk about slow, some things I may talk about a little faster, but each and every piece of the puzzle is equally as important as maximizing your profits when exiting AMC and or GameStop is the goal here. Okay, so without further ado, please smash the like on this video and hit that subscribe button. Also, make sure to get your 10 free stocks by hitting the link down below, signing up, and depositing any amount. Let's go. Okay, guys, so the first thing we have written down is FOMO, Gamma, and Squeeze. Okay, short squeeze. FOMO, fear of missing out. Gamma, when this is more so the options chain side of things, and then short squeeze when shorts actually cover. Now, if we were to go take a look at AMC, you would see it squoze to 20 and it squoze to 70, right? That didn't really happen. Shorts never got out, and that is why the play is still in ongoing play. Therefore, this was Gamma and FOMO. Okay, so just showing you what Gamma and FOMO can do, you guys can kind of take that into consideration as to why it's written down in the exit strategy. Okay, then we have retail whales, big players, aka Vanguard, BlackRock, and there are many other ones, but those two are huge players who hold a lot of shares, and we have large shorts, and we'll get into that in 1 second. So retail whales, I would like to think of as potentially anybody holding more than 20,000 shares or so of AMC. Okay, so actually maybe even over 10,000, right? A large figure share amount of retail whales. Okay, retail whales, big players such as Vanguard, BlackRock, and large shorts. This is all going to play a factor into selling pressure on AMC when it is squoze and coming down, or at least when there's a stump or a rock in the momentum. So retail whales selling, they're going to be taking a lot less risk than perhaps you and I, right? You and I, with between, we'll say the average retail investor holds 200 shares, 200 to 5,000, okay? They're going to be taking a lot less risk, as in they already have life-changing money at, a couple $100, as we're waiting for a couple thousand, okay? These are going to put little bit of rocks in the momentum, but it's not going to stump it if we play this correctly. Also, big players, Vanguard, BlackRock, they're not going to take as much risk whatsoever. They're already lending out their shares to collect a little bit of profit here. Large shorts are going to be an issue as getting to the top somewhere, right? Shorts aren't going to jump in when the volatility is still kicking in, cranking, and them realizing that shorts are still trapped in this. They're not going to jump in and short as well to come along for the fun. As for more closer to the peak, shorts will be jumping in large positions, hammering this stock back down. As retail is still buying, some retail being trapped in the stock, which leads me to another thing. Not financial advice. Do not buy back in. If you sell at 100 and you watch this thing ride up and you're feeling depressed that you didn't sell at the peak, do not buy back in. This is not financial advice. This is my personal exit strategy for AMC and GameStop. Reported data and social media. Why do I have these two things written down? Okay. Reported data and social media are two very important things when it comes to exiting this play. And the reason for that is because you're going to see a lot of people on Twitter, YouTube, Instagram, TikTok, wherever you see these people, they're going to be saying this isn't the max, no matter the price of AMC. They're going to be optimistic. You guys have to understand we're a community at some point, but at another point, every single time in the stock market, you are a lone wolf. Okay, everybody is out for blood, no matter what. Okay. Social media, this is going to be tough. You're going to see the news maybe pumping it. You're going to see influencers maybe pumping it, or maybe vice versa, bashing it, right? Reported data. It's very important to not listen to social media. This is extremely important as you can keep track with it, but don't use it as a basis for selling. Reported data is also important, and it's also important to pay attention to because you're going to be watching these short interests. As I would not get out when short interest is zero. And the reason I say that is because we have a T+2 settlement period right now, or a T+2 to where we actually see the data reported to us. So you could actually be 2 days late from the peak of when all shorts exit position. So reported data is pretty dangerous thing to pay attention to. So this one you have to definitely keep a sharp eye on, but also keep it in the back of your head. Reported data and social media, both very, very dangerous things to pay attention to, which is going to lead us into the things you should pay attention to based off of selling. Now, the next thing we're going to get into is greed and fear. What is greed? What is fear? It's pretty self-explanatory. I like to go to this quote: "Be fearful when others are greedy." Okay, so greed always comes down, but fear is your peak. And what that means is, let's say you buy in down here, right? When a stock or a company is pumping like this, and then coming back down, and then pumping, and then coming back down, this is where some greedy people may kick in, right? Because let's just say AMC, for example, which is not a dead play. Let's pretend it is a dead play, and people were fearful and they got out, which is not the case because you can tell by OBV and Adam Aaron saying how many shareholders are in the company. Okay, so this is what AMC did, and essentially all the AMC holders who bought in at 10, 12, 15 bucks are back down to their level. Okay, so greed always comes down, essentially making no profit or going into the negatives. Fear, on the other hand, is your peak. So say you did buy down here at AMC, you got scared off at 50. It wasn't the peak, but you did get out. Okay, you did get out with some profit. Okay, this is just an example. AMC is not a dead play, but when all these shorts cover and it does squeeze, it will be a dead play for the time being until it comes back down to fundamental value. I think fear and greed are very important. They shouldn't shift you too much because you shouldn't bring emotions in too much, but no matter what, these will always come into play either way. Okay, so greed and fear, also stick with your guns, stick with smarts, stick with an exit strategy, which is going to lead us into all of the things that we actually have to go over. We have sell to close, we have initial profit take, and then we have other strategies. Okay, so what do I mean by this? Sell to close would be you have 100 shares, you close this position at whatever price, you don't own anymore. Okay, this is sell to close. I personally wouldn't recommend this. Okay, I would put an X next to this. X next to sell to close. Initial profit take is at some point, let's say AMC gets back up to 77 bucks. You spent 5K on your shares, but you're already up, let's say 20K profit. You take 5K off the table. Initial profit take, check. Okay, I'm not saying to do that at 70 bucks. I'm just saying at a certain price, initial profit taking is a good way to go. I'm gonna put a check mark next to this because I do believe this is something that's good to do, whether it's initial profit taking, or let's say you own 100 shares and you sell off 5, you sell off 10, and then you sell off 20, and then $100 later in price you sell off another 30, and then you let, let's say, I don't know, 30, 40 ride. I don't know if that equaled 100, but that's the point I'm trying to get. Cut off shares slowly instead of YOLOing it all in when you already have life-changing money. Now, other strategies, obviously, we can put a check next to this. It's kind of just going to lead us in the next thing we're talking about, which is technical analysis and reported data. Okay, so exiting on technical analysis, I personally, this is tough. Okay, I wouldn't say these two are separate. I would say reported data and technical analysis must go together. And the reason being is if you were selling based off of technical analysis, this is what you would do. Okay, right? This is, let's say, $100. This is $300, and this is making higher highs, higher lows. And if it stops doing so, right, and it comes back down, this is, even if it came back up, this is a technical pattern that you would not want to play, right? This is more so likely not going to break to the upside. Now, what's interesting about this is this isn't going to be a technical play when shorts are covering. Of course, that's why you also have to throw in reported data with it. Now, if you throw in reported data with it, and AMC is trading sideways at this level for 2 days, 3 days, and you get the accurate reported data, and short interest is still pretty high, then you should feel pretty comfortable waiting for another rip and a dip below a certain period or a certain line can be your confirmation not to do so. Or you can do other strategies that help save you from this, which is what we're going to get into. Now, real quick before we do that, let's talk about limit order, market order. Both very dangerous. Both you can't really dodge, right? You have to do one or the other. Now, if you do a limit order, here's what's dangerous about a limit order. Now, if you do a limit order, it sometimes won't fill because of volatility, as well as a market order, but limit orders tend to often do so. It also depends the broker you're on and what clearinghouse is executing these orders, but limit orders are tough because they sometimes may or may not fill. Another thing with limit orders is, let's say you have a limit order to sell at $100, the price comes to $99, you're not watching your computer, you miss that, it starts selling off. Okay, so limit sell orders are extremely dangerous. I personally, when this is squeezing, am not going to be looking away from my computer, but I know some people have to. Okay, so just be very careful, very skeptical with limit orders, and how to play them safe we're going to get into in 1 second. But market orders, kind of the same thing, very risky in volatile moments. But you can kind of play this off of technical analysis, off of reported data, and you can kind of think where large people are going to be selling off, sell off a little bit before, which leads us into the next thing, pre-milestone selling and stop losses. Okay, stop losses, I'm going to check this off. I recommend stop losses only when you're happy with what you are up. Okay, so it is going to be extremely volatile. So stop losses can get smacked and then the price can bounce right away. Stop losses are very scary in this sort of scenario unless you're using a stop loss for partial sell off, right? Not sell the close, like you're selling partial shares, or you're using a stop loss when you're already up enough where you're happy, right? You have life-changing money, dope. You're gonna set a stop loss just in case you don't miss the peak. Also, trailing stop loss, whatever it is that you would like to do. Recommend pre-milestone selling. This one is very important. Keep this in mind. When AMC gets to $100, it's going to be a psychological move. When AMC gets to 500 to 1,000 to 2,000 to 5,000, it's going to be psychological, right? There's people saying, I'm selling at 1,000. I'm not going to get greedy. There's people saying I'm selling at 100, such as Vanguard, BlackRock, Retail. I don't know if this is their number. I don't know if this is their price, but a lot of people are going to be taking less risk than you are. So the pre-milestone selling would be selling at 90 before the price hits 100, selling at 900 before the price hits 1,000. And the reason for that is because as soon as you hit sell walls, these selling blocks, price is going to drop dramatically. It's going to get halted to the downside. It's going to freak people out, and it's going to continue to drop for a short period of time. Now, this leads me into another thing as to not buying back in. When I went and said that don't buy back in, is because you can play downside profit, okay? I stated at the beginning of the video, do not buy back into the stock, okay? At least until it comes back to fundamental value. If you want to own the company, sure. A downside profit. When this thing gets to 20 grand a share, for example, and all, short interest is zero, it's not staying up there. I'm telling you right now, the price of AMC stock is not worth $20,000 a share as a fucking popcorn movie theater company. The price is coming down, okay? So what you can do is buy a singular put that won't dent, your profits on this play at all. That won't dent your profits at this play that you're willing to lose with a decent expiration, far expiration, because of halts, volatility halts, clearing halts, etc. This is going to take a while to come down. Now, with downside profit, you know that options, if you guys have played options, are 10x leverage, right? So if you buy one contract, two contract, when they're extremely high, it's not going to dent your money. Depending on how the market makers are playing these contracts, of course, it's going to be expensive. But either way, you can do this. It is an option, and it's also an option for people who miss the train on the way up. Be aware, price fills may not happen, and also top wicks, okay? Top wicks and price fills. We will be on stream to try and get top wicks because I want my community to try and be able to hit the very peak of every price. That's not gonna happen. You're gonna get a handful of people, but I want to try to be that handful of people. Top wicks, be very, very careful. But overall, guys, I don't know how long this video is right now. I assume it's already pretty long. This is what I got for you for this video. I decided that it was time to, throw another exit strategy out there, even though I put out final one. It's been months. People have been asking brackets, exit, whatever. That is it, guys. Please consider smashing the like button. It does help me out. And we are almost at 6K subs. I love you all. Lottery Stocks out.